like I was saying, right? The weekly cycle, the daily cycle, some people even have the monthly cycle involved in this stuff. So it's just simply the range cycle. It's going for internal to external. And that's what happens day in and day out. It happens on every time frame because it's an algorithm that runs the market, right? Now, some people think there's only one algorithm, but there's actually, there's a few. There's few algos. It's not just strictly one. I mean, we can just say it's one to not complicate things, but eventually there's multiple. But this all information that I came across personally, and whether it's true or not, I don't know. But I do know there's an algo, and because there's an algo, the algo prints the same thing over and over again. So if it prints something over and over again, then what is it that it prints? And that's where pretty much where T1 T2 can play, which is, oh, it prints this and that over and over. I saw it in the 1 minute, I saw it in the daily, I saw it in the weekly. And it was just mind blowing to me when I first came across it, because if it's the same thing over and over again, then, that means at least 80% of the time it will be correct. And the other 20% is just going to be just a regular flaw, let's say. But the cycle, daily cycle, the weekly cycle is the same thing of the range. You're going to notice how the week ends. So if we can go to the 15 real quick, remove this, and we turn on like the weekly indicator stuff. All right, so look. So this is the day. Look at this. This is Wednesday. This right here is Wednesday. This is the range. Came in. That's the range low right there. Right there. So Wednesday, I don't know if this took it out. Oh yeah, I did. I didn't even see. I'm using the laptop right now, so bear with me. Yeah, I did take it out. Good. By a pit maybe. But that's the high, that's the low. Right here. Price came down. Didn't break the high, fed a swing. And then eventually it took it out by Friday. Took out the internal, strong high holded. Created a new range from here to here. Came up, took out internal, target external. Here to here, took out internal, target external. All right, so we're able to anticipate days ahead before something happens. So whether they call it the weekly or daily cycle, whatever they want to call it, we're able to anticipate these moves as what I call a range cycle. Because if you know where you're at in the range, then you're able to anticipate the day. So if we knew, all right, that this is what we're gonna aim for, then once we took out this low, we took out stops, we could anticipate the longs for Thursday until we took out internal. Because we knew that we took out internal and we came into a POI, then for Friday, our daily bias is what? Bearish. So do you see what I mean, that we're able to get all this information by understanding where we're at in the range? The daily bias, the weekly cycle, the monthly cycle, whatever. If we knew that we took out internal, then I'm expecting what for Wednesday by New York? Bearish. I can expect longs on London to take out the internal. So I go long on London and I go short on New York, and we end the day. We took out this low, we took out sell stops, right? So I go long on London and then we can short on New York, right? Look what we came into. So I'm anticipating the next day to be a bearish overall day pretty much, because around here is already 10 o'clock. So London, bearish. We took out stops, switch, because now we got to take out buy stops. Bullish, they're in New York. All right. And we're not using nothing else. It's just pure PA. And now what you guys are going to get added to the knowledge hub is going to be pretty much the theory behind all this stuff. It's like, you know, like the SMT divergence, the TDI, the magic timings, and all that stuff. All of that for me, the reason I don't, or I never taught this because it's very basic, but I don't think it's needed. But regardless, like I said, I'm gonna put my pride aside and I'm gonna just teach it because maybe it'll help you get a better grip of the range, you know, a better understanding of how these ranges work. If maybe you understand more in detail what a range is. Simply, it would just accumulate orders, distribute orders, and whatnot. So that's all it does. It builds liquidity for the future. So if we don't see this as a range and we see this as a regular structure, let's say, then it will look something like this. We got equal highs. The price took out, right? Equal lows here. The build up, that price took out. Equal highs here. We got the build up here. More build up. More build up. Then we have that false flag and all that. More build up. The build up, trend on liquidity. You see that? There's a man. Equal lows. Trend on liquidity. A bigger build up. So this is how it would look if we didn't see this as a range, right? Which is just liquidity everywhere. It's building up and then it's just doing the manipulation and then it's just going the right way in the distribution pretty much, right? So it's doing. So if we put it in a range format, we have a better structure. And the whole point of a range is to help you understand where you're at in the market when you open the charts. So because it's in a range format, you're able to see it much more or just clearly and not just trying to identify every high and low or every equal high, every equal lows, because now you're expecting this to get taken out. And that's what the ranges work. The chat. Measure source of it. Yeah, man, it's like the same thing that everyone pretty much teaches.
Brian,
Yeah.
Brian, can you go on a 4 hour? I want to see something.
Yeah.
Just. Yeah, because I wanted to know when the price when the buyers came in just okay no come to this low the low high here the strong low here.
What?
There's a strong low before the buyers came on board to push the market on top. Yeah, down again. Oh, come on. It's just that I'm using my phone now.
Oh, using your phone?
Yeah.
Okay, so like where exactly?
This strong low that pushed the market back to that imbalance, because there's an imbalance on your left before the market.
All right, hold on.
There's that. Can I just?
Yeah, okay. Can you do you see the bottom numbers? Can you tell me what number? 12, 6, September 29, 12.
Oh, okay. There's the let's look at 22 here. Yeah, 22.
22.
Yeah, 22 on your left.
Okay, 22
on your left.
Yeah, I'm using my tool real quick.
Okay, there's an imbalance there. That imbalance on top there.
This one?
No, again on top. The other.
This one?
No, the next one. Then the next one.
Oh, all the way up there.
Yeah. Okay.
Okay.
That whole I want to know why didn't, okay, when the price came back, it didn't take out that high. It didn't take out that high. Do you have, because I thought that would be now liquidity on top of it.
Yeah. So it didn't take it out because
Yeah.
the daily time frame and the weekly. So let me show you why I didn't take it out. Oh, well, yeah, this is one I just covered, but I'll do it again. So go to the weekly. I just lost where we were. Hold on, mark it up. All right. So what do you see in the weekly?
Oh, okay. I'm seeing an imbalance being filled now. Okay.
And what's just below it?
Oh, liquidity. Yeah.
Yeah, exactly. So if there was a 1 minute, where would you enter?
On that other block right there.
Yeah, exactly.
Yeah. Okay.
Confluence. Gotta line everything up together.
All right. Okay. All right. It's making sense. Okay.
Yeah, I got it. Yeah. Okay. But yeah, so what I was going to say about this. Okay, so again, so without any ranges, we have the buildups that got taken out. So here, 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 it just builds up liquidity and it gets taken. That's all the market does. That's all it does, right? And then what the concepts or topics that are going to be pretty much just given out to y'all are just a way, I would say, just a way for you to, I guess, understand the logic or theory behind why the range works. I would say that's how I see it personally. Some people may disagree, but I think that's how I see it. And so in short terms, all of that, all those topics, right, is pretty much all blended in, which is what I created T1, T2. And so that's it. So for those that ask me what's the difference, is really no difference, right? All those topics are just individual topics explaining every individual thing. But at the end of the day, it's going to lead to the range, T1 and T2, right? But maybe, hopefully, it helps some of you guys get a better eye or a better grip of understanding of the ranges. Who knows? But regardless, everyone is different. So I'd rather just put it out there and so you guys can become consistent and make some money. That's what we're here for, right? To make some money. That's it. That's the whole goal at the end of the day. But yeah, of course, for some people, it's like some exciting stuff, but for me, it's just very basic stuff. But that's me though.
Brian, is here in the 4 hour is the same idea. Look here, the last reaction from the rejection block. Why this is not internal range liquidity? Sometimes I get confused between them. This is yeah.
I think that was because the daily. Let me check the weekly. Yeah, so we also have a weekly. So let me draw a line on this. Give me a second. There's a weekly rejection, daily order block, 4 hour. Do you see it?
Yeah.
So that's why we choose this strong low.
Mm.
So inside of a higher time frame order block, there is a QM. The QM that we're going to choose is a QM that aligns up with the higher time frame block. So that makes sense or not?
Yeah. Thank you. I have another question. Do you use premium and discount range?
Yes.
Fibonacci.
Yes.
How do you use it?
From the low and the high of the range. So, for example, like this is with the whole entire range. So from here to here. So from the low of the range to the high of the range. That's how we use it on every range. So 4 hour, 1 hour, 5 minute, 1 minute. We use it from the low to the high. We want price to come into premium, for example, to premium area or to a discount area to take trades. Now, if, let's say, for example, we're looking for shorts, right? If we take shorts here, it's below the equilibrium. Can we expect this to actually just hold? Right? Is this high probable if we take it below the equilibrium?
No.
Or we rather see price come up into here?
Yeah, sure. To the
right?
premium.
Yeah, exactly. So because we're down here, then we can use this as an excuse to go along to take out internal liquidity, come into a better pricing or VIP pricing for the institutions, and then we short it. So yes, it plays a big role because if you're obviously down here, you're not expecting this to just do this. Sure, at times, yes, it'll do it. Like 10% of the time it will, but that's just rare scenarios. But most of the time, we're expecting price to come into a good pricing point, and then we should short here. So the same way that if we were on the 15-minute, let me just clear this out. I'll use this for example. So low to the high, we want price to come down here into a nice discounted price, right? So because now we're here in nice discounted price, we can either take a direct entry or look for a confirmation entry, which I do believe we got one. If we go to the 1 minute. Oh yeah, we did. Look at that. So everyone, what range is this? Anyone else?
Type 2.
Type 2? Why would it be type 2?
The lowest low, it's lower than the next low.
Okay. And like anyone else want to give it a shot?
I agree. Type 2 also.
Okay. Nobody else. All right. Yeah. Yeah. So later on liquidity, then we have the breaker structure. Let me check the 5-minute if there's any structure points there. Nope. Or the breaker structure here, right there. Clear the high. We got the trap here. You can already imagine everyone going along here. That's your trap. So fundamental traders get taken. And then now why do we choose this one? Because just give it a reason to it on there. Now let's check the 15-minute. All right. I'm about to give you guys a quick little test to see if you can actually get this. Let's say we want to take a direct entry, which is, I know is one of the areas that you guys struggle a lot. I want to take a direct entry. All right. I found my liquidity. So I want to take a short underneath. All right. So let me know to what time frame should I go to find a POI here? Or what is the most logical thing to do to find my correct POI if I'm gonna take it direct and I only have one try and just one shot, one kill?
M5, I would say the most probable.
M5, okay. Chat 15, question mark, 10. Hold on, I don't want this to play out. Hold on, let me just remove this.
Wait, from which range, actually?
From this one. So this is the liquidity right here. And I want to go along. Direct entry. What time frame should I go to? Or what's the most logical time frames that I should go to look for a POI? 15. So 15 looks like this. Okay. Now we wouldn't go to the 1 hour because we already know we go to the 1 hour. That's going to be a big wick. So 15 is going to be the highest. All right.
M15 to M1, I believe.
So we see the trap or The liquidity right there. That line is the liquidity. All right. So in the 15 minute, do you have anything clear?
Say if it was liquidity right here, like a bunch of liquidity right here, and it,
Let's check M5 maybe. Let's try M5 first.
Yeah, that's already mitigated. But we're looking for a long underneath this. Underneath 9959 level. A direct entry.
Oh, then M1 for sure.
And what POI we use?
Imbalance maybe on that.
What I would do is do that wick to the left.
The wick to the left.
The wick to the no, you see the low.
Yeah.
The low that's already the wick to the left. The wick more to the left. It's
This
like the
one?
low that it took out. The low that it took out. See the low it took out.
Yeah.
So I would just draw a rectangle from there to the.
Gotcha.
I don't know how to draw my screen. No, I wouldn't do that. I would just. How do I draw my screen? Let me see. Yeah, I would do that. That's what I would
Yeah.
do. I'm
Gotcha.
POI.
Gotcha. All right. So in the 15 minute, there's obviously nothing clear. We agree. Right? There's nothing here. Nothing obvious. Right? On the 5 minute, same thing. On the 1 minute, we have an obvious inbound field price action, order block, rejection block, etc. Cool. So now let's go into some sub time frames because I know that some of you guys use it. So let's go into a 10 minute. That's looks in a 10 minute. Let's go into a 3 minute. That's how 3 minute looks. And then let's go into a 2 minute. That's how a 2 minute looks. All right. Now I don't personally really use sub time frames. I just use them if I really don't see nothing. But the reason I don't really use them is because of this. It's because we get so many scenarios that it would just mess you up. So many POIs. So only use them when you don't have nothing. But in this case, we have a clear, obvious block right there in 1 minute. The 15 minute would have been the highest we would have gone to because we go to the 1 hour, it would have just been a wick. 5 minute, nothing. Absolutely nothing. And 1 minute, this is all we see. So will we agree that I would take it from the M1 as okay? Yeah. So will we agree that this is our POI? And this is inside of the 15 minute order blocks that we just seen right here. That's still inside. So will we agree that that is the POI that we'll use?
Yes.
Okay. So price is here. So are we still in the green? We're good?
Yeah.
Yeah.
Let's see.
There we go.
Perfection. And yeah, now we should go because we are in a higher time POI that is inside of another higher time POI. We have a bigger structure, we have a range, we have equal highs, etc. How would this make you guys feel? This right here, hold on. That right there.
The low hasn't been broken yet, so I'd be chilling, honestly.
Yeah, so like, hold on, let me just play it again. So those that fear this can see it. Look at this. Just look how it just came down. Don't fear this. Remember, the retail traders fear this stuff. They fear this with their lives. All right, we are not. Okay, just let it be. Stop loss is below here. It should be below here because you're on the 1 minute. Just add spread, cover spread, your broker, etc., and just be somewhere here. All right. Still just there. All right.
Brent, I just want to ask, when the price came down, it also formed a new range, right? When it's coming down into a point of interest.
You said what?
As the price came into a point of interest, now coming from the top, it also formed a range coming into a point of interest. It also formed a range from there because it was breaking structure to get into a point of interest, right?
Yes. Well, I mean, that's how the market moves. That's what people call the algo structure, right? And I just call it range. So yes.
All right. Okay.
Yeah. I
Now,
mean, that's how the market gonna come in.
If you were to take shots to get into a point of interest, because you are looking for longs, if you were to take maybe shots from the top there, how would you maybe try to identify that to get into to go for shots?
Yeah. So for me personally, like I mentioned in my advanced videos, if we're already in a buy zone in a POI that we're gonna look for longs, that's low probable. So I'd rather just take the long than to take the short. But then that's where premium and discount come in play, right? So I'm a short up here. Up here, I'm a short 100%. Down here, I don't like it. I mean, if I wanted to take the risk, I'll take it, but I won't be surprised if it just destroys me. It's very low probable. You're already in a buy zone. You're already in a buy area. Like you're a discount. It's not high probable. To me, it doesn't make no sense. But sure, you can still take the shorts, but just make sure that you lock in your profit and don't expect this to just keep on going because you're already in that POI. You already took out liquidity. Now it doesn't matter of time for it to just fly. So shorts are gonna come up here.
Yeah, I'm just asking because I wanted to know if you would still identify a QM to go for shots coming into a point of interest.
Yeah, I would. Up here though, up here would the only way I take them shorts. Down here, probably not.
All right, now.
Yeah, like you can short until it comes into here. But I will exit here because we're counter trending. So you exit here, and then you wait for this to come. So that's why I exit on internal liquidity. But for those that don't exit on internal liquidity, and you're waiting for it to come into the POI to exit, you already know two things can happen based on the theory videos, right? The first thing is that price may not tap the POI that you thought it will tap into, and it'll take you out break even, and you will lose your percentages, right? So that's why I target this because that's a safe area, right? And the second thing that can happen is when price comes into this area and here, right? And you're willing to exit here. Now the confusion comes in play is should I short this or should I hold this? So now your rules change. So you want to have a set of rules. Am I going to exit here or am I going to exit here? And exits are more important than entries. So if you're going to exit here and your rules say that you're going to exit on internal liquidity because you're counter trending, then just exit. That will remove risk and fear. So now when you exit here, you're not looking for shorts down here no more. Even if it gives you a good opportunity, just don't take it. Stick to your rules. Wait for the long, take the long because high probable. It's VIP pricing for the big players. Take the long, then exit here. There's no reason to short here unless you really want to. But based on my rules, I exit here. That's just me. Yeah, sure. I'm gonna miss out on like 5% extra, but you know, that just greed just coming into play. But that's just me though. If you guys want to exit on the POI, it's up to you, but you already know the flaws. In other words, the cons when you exit at a POI. It's not gonna always come to your POI, and then you're gonna get break even, and then you're gonna mess up your entire direction of bias because so and so. But yeah, I'll assure until it comes into the area for sure. On the second time frame, same thing is happening at 1 minute POI. Yeah, the same thing, man. It's the same thing. Let's see if I can go to there. Yeah. So I'll let you guys mark it up. Do y'all see it? I'll give you guys a minute. Do y'all see y'all's second time frame entry? So what type would this be if you enter here?
Type 2.
Yeah, type 2, exactly.
So
We go to
But
like
why
the,
it's not a type 1? This is a liquidity and price should react from here.
because well, this is a 15 seconds time frame. I think all of this already mitigated on the lower time frames. Let me go to 10 seconds. 5, yeah, so that's 5 seconds. Oh, that's the wrong one. Hold on. Yeah, so now we're in 5 seconds once. Yeah, so we can't see nothing here. So I wouldn't have no interest at all. So after we broke this high, because that's the high that took out the low, right there. Right there. This took out liquidity, came in to mitigate this. In the area, that's all mitigated. Then price went to the upside, came down, final order flow. And here, price per structure, mid retracement, didn't break that high, fair swing. I'm gonna take it there first. I wouldn't take it all the way down here. Now, if you're willing to take it all the way down here, again, just this goes back to a higher time frame. What is this line up with? If you go to the 1 minute, let's move all this. We have a draw line. I'm going to get a wick. Change color on this. I'm going to get a wick. This came down to mitigate. All right, time from order block, which I've done to get a wick in there. That's the low we're going to choose. Because a higher time frame. Higher time frame block, higher time frame POI. Inside of a higher time POI, there's lower time frame QM. And that's how it looks.
Ryan, bro, can you hear me?
Yeah.
Bro, which video in the course is about this topic, how to draw the red lines? Because I was not sure where I found it.
Draw the lines.
Yeah, how to mark them. So how you do it?
Oh, the POIs.
Yeah, the red lines. I don't understand it 100%. This.
Have you watched the theory videos?
Not all.
Okay. Well, I mean, yeah. So isn't a theory
That's why I'm
video?
asking which video like is going more in depth regarding this.
The theory videos. That's where I put I cover everything. It's just higher time frame, and then from the higher time frame you break it down, and inside there's a QM. But don't worry.
I will watch it, bro.
Yeah, but don't worry if you don't understand the theory videos. I'm currently recreating the basics for you guys with more images, more examples, because yeah, I mean, why not, right? I believe the more examples I give you guys, the more images and more stuff, you guys will just get a better understanding. But yeah, don't worry about it. Yeah. At the end of the day, it's completely useless if you guys don't understand this. So I just want you to understand this. So, and I got a lot of DMs of a lot of people that just joined that are new to SMC, new to liquidity. So yeah, like, might as well just start from scratch, right? And just give you so many examples on the image format, because people learn better with images and written format than videos. So just give you a lot of examples on that. And yeah.
Thank you. That is appreciated.
Oh yeah, of course, bro. No problem, man. I just want to see the feed full of everyone catching trades. It's my goal. I just want to see everybody catching trades. All right. So some of the OG members, some of the old students are just pretty much just now chilling. They're doing their own thing. They're not as active no more because they're already doing their thing. There's a few OG students that are active in the chat, but the others are just done. They're just doing their own thing now. They got funded. Yeah, they're doing them. So like I can't control what they do or what they don't do. So if they want to just leave, they leave. But majority of them stayed, and that's awesome. But yeah, those that want to help.
Brian? I heard you always say after every break structure, a new range will create it.
Yes.
So if this is a sorry, if this is a break structure, so now the new range will be from here to here, right?
Yeah. So just a 1 minute time frame. Yeah. So if this is the
Why price didn't respect the new range and go down? In another way, when I should see the price from the bigger picture, and when I see it, this is the new range after break structure. Do you understand me, bro?
yeah, I understand you, but the reason I didn't respect is because we're coming from this higher time frame. We're coming from higher time frame POI, so we're bullish. So we're looking for longs. So at the break, strong low, break a structure, hide the range over here. So it is a POI. So if you went short here, nothing wrong with this. But because we're coming from a higher time frame POI, we're expecting longs. So this feather swing will be beautiful because that just confirms the overall direction of bias for us to take this high out and then take these highs out, right? But yeah, the break, when you get a bigger structure, there's going to be a new range being created, 100%.
Okay, well, now why this is not a liquidity for unmitigated wick here?
No, that's not that. Because what was it? Oh yeah, the 1 hour, I think, or 4 hour. So we have a 1 hour POI right there. I think it was a 4 hour too. Yeah, 4 hour mitigated wick, 1 hour mitigated wick, 15 minutes mitigated wick, 5-minute QM. So we choose that one. We choose, remember, the higher time frame block has a QM inside. So we choose a QM that lines up with the higher time frame block. That's the one that we choose. And that's it. And then these have liquidity above. And that's the one we want to take. And like that's how we mark our POIs. So that's how we are able to catch these entries that are in the middle of nowhere. Pretty much. But yeah, guys, we hit like 3 hours already. So the call about to end like 10 seconds. So any questions? If nothing, we can stop here.
Appreciate you, Brian, as always.
Thank you.
Thank you, bro. It's very insightful.
Thanks, Brian. That was really good.
Awesome. Well, I appreciate you guys for being here. I hope you're excited for the new content as I am. So
For sure.
yeah, have a good weekend. Talk to y'all soon.
You as well.
Good weekend.